Hello guys, and welcome back to another video by Vertex Investing. Now, before I go anywhere, I just want to say thank you very much for subscribing to our channel, and also the messages that we receive like daily even about how you guys are loving the free content, putting it to good use. In fact, the message yesterday I thought was brilliant. So he passed his challenge using the free content. He was actually close. From what he mentioned, he was close to losing the challenge, but he somehow pulled it back. I didn't actually ask him about his trading, to be fair. Well, I'm still waiting for a reply from him actually, so if you're watching, reply to my DM. But yeah, I just want to say thank you, and I just want to show some appreciation to you guys. So in this video, now before I get anywhere with this video, make sure you're watching this when you have the time, because there's a lot that will be covered in this video, and I want to make sure that you can understand and grasp as much of it as you can. Now, the main question that I want to address is, can you buy and sell the same pair? And the answer is yes. And there's several ways to do it, because when I talk about ranges, we have to think about what trading range we're in at that given moment. Okay, we also need to understand the trading range we're in on the higher time frame. Okay, so the first thing that we need to address is understanding that if, for example, you have a move, I don't know why I drew it like that, hold on a sec, let me try to draw a better one. There you go. If, for example, you have a move like this, right, and you know that the overall trend is bullish, price is not just going to carry on going, is it? It's not going to do that. It doesn't work like that. So you need to have that pullback of some sort. Now, this is when you start getting this sort of pullback that's coming down to a potential point of interest where you can take the trade to go long again. Now, say that this is the daily or the 4 hour, for example. This move could be potentially what, 200 pips, right? For example. Realistically, are we going to wait 200 pips to catch our buy? Because, for example, the GU trade that I shared in the Telegram group, it took 8 days from when I marked the POI. Now, I did get a sell, but it was temporary because I got taken out of break even after I took partials. But it's just showing you that you don't need to wait for your higher time frame bias if you understand structure. Now, that's the main thing that I want to address in this video. Is all we are trading is a change in trend, right? For example, if we are approaching like a point of interest, what happens? You get a change in trend. And what confirms that change in trend is, firstly, you need the break in structure, right? Now, make sure you make note of this. You need the break of structure from here. You need to have a, for example, this is for a sell. You need to have a lower high. Okay, you need to have a lower low. All right. You also need momentum in your favor. So remember momentum. Say, for example, it takes 10 candles. Say, for example, it takes 10 candles to come up, but it only takes 3 candles to come down, for example. Where is momentum? Momentum is to the downside, right? So that gives you a bit more confidence. And the other confidence should be the fact that prices hit your point of interest or the end of your range. So, which is why I talk about range so much, is because if, for example, let me draw something for you. So say that you're in this position, right? And then price starts coming from, it starts doing something like this, right? Your range is obviously here. Now, if you know that, when you don't know when price is going to start pulling back, okay? We'll never know that. But we have to understand that markets are fractal. So what I mean by that is whatever happens on the lower time frame will replicate on the higher time frame, right? So, for example, say at this point, and you start to monitor, and at this point you don't know where the range is actually going to end, okay? But say at the at the point, right, you suddenly start seeing, say on the 1 minute, you start seeing something like this. Okay, you start seeing something like that. Okay, this is a change in trend. If momentum is there, if the structure break is there, if you get a fair few, for example, you're better off waiting for the next one, right? If you get a fair few of them, you know that price is starting to shift in market structure. We don't know how long that's going to be, but you need to bear in mind that the fractal nature of the market, if this is happening on the lower time frame, for example, the minute, you know that it's probably going to replicate on the higher time frames. So your best bet, if you want to trade counter trend, you can get an entry on a minute time frame and hold it towards your POI, because you know that the overall structure should be coming from here and carry on, right? So you know that you can waiting for your buy here. But if it's a 200 pip drop, you want to capitalize as much as you can, because bear in mind, the market doesn't owe you anything. Okay, the market is not there to give you money. You have to work for it and you have to understand it. But all we are trading is structure. OBs are only the entry. Structure is order flow, right? OBs is just your point of entry. So we're trading effectively. Every trade that we take is a reversal, right? No matter how you see it. Because say, for example, even on the 1 minute, if you get this, okay, and then we want to enter here, right, we are trading a lower time frame reversal. That's exactly what we're doing. So all we're looking for a sell is literally the change in trend, which is that position, okay, and for a buy you are looking for that. Doesn't matter what time frame you're looking at, okay, as long as you understand what trading range you are in. Okay, so let me mark this out so you can screenshot this if you want to. So for a sell, okay, you want to have a change in trend, okay, and for a buy, same thing. And you want to have this sort of structure. So what you need, basically, you need a breaker structure, you need momentum, and you need a confirmation. The confirmation is when price tends to continue to break structure, as long as momentum is following you. Same thing this way, you get a breaker structure, you get a higher low, and then you get a new high. Okay, so basically for a bullish move, okay, a bullish move is only invalidated if the lows are being broken. Forget about the highs. If the lows are being broken, for example, if price comes and breaks the low, that effectively can potentially change trend, right? Same thing with a bearish trend. If price comes and breaks these highs, price can continue and doing that. But you have to bear in mind is, although price can come and break these structures, it can just be a grab of liquidity, because liquidity is sitting above all these highs, right? So it can just be a grab of liquidity before heading back down. The only way you know if price is going to continue is if this structure that's formed, if the new structure gets broken. So say, for example, this creates a new low and then that gets broken again. That's how you know that's a confirmation. If this high gets broken, that's how you know that price is starting to change in trend. And what can we see here? Breaker structure, the failed structure, and then we carry on. So this is the main thing that you have to realize is this is all that we are trading, right? Don't complicate it more than it needs to be. You are trading structure. That is it, right? With all the confluences you have, that is all you're trading. So for example, let's talk about GBP USD. As you can tell, I obviously love this pair, but if we think about let's go back to here when it loads, right, there we go. Right, so if we think about it in terms of range, so this is the new high that's obviously been created here, yeah, sorry, wrong one, there. Okay, and the low that's being created is, as we can see, is the last high was created here, then we created a low, so that was the low that was made. So that's the range of the daily. So say, for example, if you're at the highest point of this range, obviously you don't know if price is going to start reversing or not. We will never know that. But if you get indications that there's a change in trend, then you can look to enter your trades, right? But obviously you're going to go through the time frames and find your points of interest, right? So if we go through the time frames and find that we can obviously see that we've got points of interest here, okay, for a buy to continue the trend, points of interest here, okay, which you can refine. I think that's all I can see for a buy. So remember the concept of premium discount pricing. We know that if we buy, we want to buy below the 50%. So we know that either one of these two POIs is fine, right? That is completely fine. We don't want to be buying anywhere around here because, you know, you're not in the right area. You want to wait for below 50%. So to understand premium discount pricing, just do your extra research on that to understand it a bit more. But the 4-hour range is exactly the same as the daily range. There's no difference. There's no lows being formed apart from this particular area. But the only reason why I'm marking this part out is purely because of the imbalance that's sitting there. Okay, so price has a reason to come back here, right? There we go. So in terms of trading back, if I go back a little bit more, actually before I do that, let me go to, say for example, the hourly, because you can see it already before I even go down. You can see that price is broken structure, right? And then it's almost coming to break structure again. Okay, so it's starting to confirm that price is changing in trend, but this is only temporary. This is counter trend. Pro trend is bullish. Okay, your pro trend, your overall bias and trend should come from the higher time frames, which is a 4-hour and higher. Okay, as long as you understand that, you can literally take a buy, you can take a sell, buy, as long as there is a shift in market structure. So let's go back to this high, for example. Let's just go, I don't know, let's go 1 minute and find the highest point and see what's happening. So say for example you're deciding to have a look at the chart and you're seeing that price is just starting to skyrocket, right? But now you're starting to see these really long wicks. Now when you see long wicks, as we know, the standard way to see it is the fact that there's a rejection there, right? And as you can realize, that price is starting to slow, because what you can see is you've got really big impulses, but then you're starting to see more bearish candles present. You're starting to get a slow in pressure, starting to get smaller candles, right? That's sort of indicating to you that price is starting to slow down and it's potentially can start reversing. Okay, and that is crucial to see, is the size of each candle, because they're starting to get smaller and smaller, and that's indicating that, you know, there's exhaustion there, because price cannot keep going. It just won't. It'll have to pull back at some point to correct itself, correct all the imbalances that is formed before it carries on going. All right. However, we don't know if price is going to come here and carry on going. So sometimes we could be waiting, God knows how long, for price to enter the POI for it to just carry on going. Because this can be, it can break this low and then carry on going, right? We don't know that, and we just won't know that. The markets are unpredictable, and we can't trade based on opinions or predictions. We have to trade based on what we see. But let's go back to the minute time frame. And this is why I talk about structure so much, is because this is all you need to know. So let me get rid of the top range so we can mark out structure properly. So for example, now I haven't actually checked the 1 minute, but I assume there's something here, because price has reversed from here, which we already know. So we've got this high that's formed, and the low that was before that was here. So let's go to here. Okay, and let me get out of this from here. So for me, that's not a break in structure. So let's wait until the structure breaks and see what happens. So there we go. So we've got a break in structure, and now we create a new low, which is here. Okay, and now we created a lower high. Okay, so now this is our trading range. So at this point, what we can see is that we already have a POI sitting here. So if you want to go to the 30-second and see what we have, there's an OB sitting there. So it's perfectly valid to take an order and place it here. We can have a 2 pip stop, and carry on going. Now in this situation, the reason why is because we know that price has changed, because we created a low and then we broke structure. Okay, because there's a failing to break the structure high even though price is bullish. So what does that indicate? That price is starting to change in trend. So let's go back to the 1 minute and see what's happening. I don't know if this triggers or not, but we'll see. Okay, so remember, this is your trading range. When the range gets broken, then the order is invalidated. But let's go and see what happens. Okay, so we've just violated the structure. We can break this, and now we've just created this new low, which is here, and the most recent high, which is there. So now this is your new range. Now that we broke structure, right, we can look for a POI. Now this is a huge OB, and it's not overly clear either. There's no imbalance. 5 pip stop, that's fine to be fair, but you can just use 50%. But let's go through the time frames and see what we find. So we've obviously broken structure and we've got a nice candle POI here. So the first one didn't trigger, but remember that this order was invalidated because price broke the range. So now we're inside our new range. So now we can take a trade from here, from the open. The stop loss can be just above, so let's just do 3 pips. Make sure you include your spread just to cover that. And let's go to the, actually let's stay in the 30-second. Let's see what happens. So it triggers and now it breaks structure. Now that it's broken structure, you should be at break even. Okay, so you should be on a break even trade at this point. Now you can take partials at each structure break, but you know that your structure, your overall TP is going to be, it's going to be where? It's going to be your first POI and your second POI. So put it at the open of the levels. So you know that you're probably going to take some partials off here, or even close the trade, or you can either wait for the most extreme point, which is down. Oh, why have I done that? There we go. Or you can wait for the most extreme point, which is here. Okay, so that's going to be your targets. Alternatively, you're going to be breaking structures along the way. You can take partials on each of those. It's up to you how you choose to manage it. I do recommend getting in the habit of just closing a little bit, paying yourself just to know that you've earned something from this trade, and letting the rest run. So I'll use 2% myself. I will close 10%. I use not 10%. I will close half of my trade when price has reached a 10R, and then I'll let the rest run, usually depending on the bias and the position I got in. So now that we're in this trend, we can literally follow the ranges. Now if you want to scale in, you possibly can. We can look for scale ins and see what happens. So we've created, obviously we just created a new low, and the most recent high is here. So is here. So now we've made a new trading range. The price will probably come and react from this OB here. We don't know. But let's see what happens. Did it reach that OB? Actually, I didn't see. It almost reaches that OB actually. Yeah, it almost. So it probably would have missed this order if you placed that one. Unless you use the minute time frame, then your OB is here. So you probably could have got in that one as well. But this is showing you that you can buy, you can sell, even though your overall trend is bullish. So what you'll see is recently, if you follow me on Instagram or in our free Telegram group, which I'll actually pop up here. Where is it? There we go. I've only been, because price has taken a while to reach our higher time frame POIs, I've only been playing with the 1 minute time frame and the 30-second time frame, and yeah, just taking these short-term trades, because you can buy, if you understand structure, you can buy and sell the same pair, as long as you're following the structure shift. All right, as we can see, we entered this one perfectly, even though, let me extend this before I get out of it. I mean, look at this. This will give you a 75R, all right? Say you entered at the top, and obviously we don't know it's at the top. We just have to follow structure and make sure you move to break even as soon as possible to to secure yourself. But you would have hit your target of 70R on the way down. And then, say for example, if you had an entry somewhere here, you probably, and I'm not going to I'm not going to explain the buy up because this video is long enough anyway. Exactly the same. Actually, you know what? You know what? I'll do it. We'll go to here. For example, like if you're just following the change in trend, we'll see what's happening with structure and when it shifts. For example, we've got a structure shift, then we missed this order, then we had another structure shift, another break of structure, and then we probably could have entered here, right? So we could have entered on this point, but all we're trading is the shift in market structure, right? And then your TP at this point would be going back. Let me extend this so we can see it on the 4 hour. Did I extend it enough? How did I not extend it enough? Bear with me. There we go. So we just caught 70R on the way down, and on the way back up, where we expect price to go is actually at the top of that range, which is top of this range here, right? Which it eventually hits. There we go. So it eventually hits TP here. You would have caught what risk to reward was this? I think it was about 70 odd, or yeah, 79. So this combined will give you 140R. Okay, obviously if you take partials it'll be less than that, but even if you take partials, for example, if you run half of that, you're closing 70R both ways, right? Combined. So just think about it that way, and then the way to practice it is mark out your higher time frame ranges and just practice going the 1 minute and seeing what's happening to structure and follow it. And what you'll realize is how easy you can be if you take away everything. If you use the confluences for your entry as the OBs, the imbalance, and the market structure shift, that's all you need. That's all you need, and the momentum, sorry. And you can trade, you can buy and sell the same pair regardless of what the actual trend is. But as you know, if, for example, because we know the overall trend is bullish, you shouldn't be expecting to hold your sell for too long. For example, you shouldn't be like having, for example, if you're on a daily, don't expect to have price to come back to this low, because it's just not going to happen like that. You will probably, you're going to get stopped out. You have to just be realistic with your targets, whether you're going pro trend or counter trend. But anyway, I will leave you guys be. I hope this video is useful for you. Let us know in the comment section if you've enjoyed it. But if you think about it, because in terms of smart money concepts, this is literally all you need to know. In terms of Wyckoff or Wyckoff, however you want to say it, what Wyckoff is essentially just structure, right? So which is why that we don't overly focus on it, because although we are basically trading that, for example, okay, what you realize is when you see the change in trend and compare it to a Wyckoff schematic, you'll realize it's pretty much the same thing, which is how we're able to utilize this without utilizing it, if you know what I mean. I'm not going to waste time marking up where the automatic rally is, where the spring is, where the STB is. I mean, I've learned all that, but the only reason why I don't need to do it, as in I don't need to mark them out, because we don't need to. We are following structure. We are following the money. That's exactly what you're doing. You are following the money. The money is with the mitigations and the order blocks. That is all that you're trading. So just bear that in mind. Every trade should have a story behind it. For example, say that 1 minute trade that we took here. We took it because we had a change in structure, we had a structure break, we had a valid OB, valid imbalance, right? Which indicates what? It indicates that institutions were active at that point because of the imbalance that is being created. Retail traders, if, for example, me and you, or you and I, sorry, that's very bad grammar, we cannot create that imbalance. That is only created by the institutions. So just bear that in mind. So have a story for every single trade. If you don't have a reason for a trade, don't take it. If you don't meet criteria for a trade, don't take it. Don't force it. But what I suggest doing is practicing just using the 1 minute or the 5 minute, 15 minute, whatever time frame you want to use, and understand what's happening with structure. Don't ignore what is happening in between. For example, although on the 4 hour, in the 4 hour, this is all noise, right? But on the lower time frame, this is a change in trend. You can sell here, you can buy. For example, you can sell here, you can buy here, you can sell here, buy here. All right, So you can do that if you're following structure, but as long as you know where you are in space, that's fair enough. For example, remember when I said if price isn't below 50%, you don't want to look to buy. All right, isn't below 50% of this range from here to here. Okay, you don't want to look for buys, but you can look for buys in this situation because on a lower time frame you're entering another range, but you can't expect to have it reach all the way to the top because it hasn't finished its full-on retracement. So to bear that in mind. But for now, I will leave you guys be, and I hope you enjoy this video.